Hello and welcome to Long Investor. And let's do a market update. So yesterday after market, Tesla had a pretty good earnings, and I was saying that will bring a good market sentiment for today. And also, if you have been following my channel, you know I have been expecting another Wadi to hit the resistance of 14.2k, and then it will most likely drop back down before or after the FOMC meeting. And then with the Tesla good earnings, I really thought we would have the Wadi that I was looking for. In the morning, it was actually doing quite well. And then you can see it fall pretty much for the whole day afterward. And this is mainly due to your best pal. So in the morning, there is a hint saying that they will probably raise 50 basis points for the rate hike for next month. And then it was confirmed by his speech in the afternoon. So this news was what I was expecting in the FOMC meeting. I did not expect it to come out this early. So that is why we did not see the Wadi for today and possibly for the next few days. So the expectation of the market drop in early May actually came 2 weeks earlier. And right now people are pricing in of the 50 basis point. So if you have accumulated stocks in this area, I would suggest to hold for now. And if you have spare cash, I would average down when it reaches a lower point. So previously I have mentioned the 13.3k and the 13k, but that is if the market has a Wadi to get rejected and then coming back down, then those are the two levels to buy. But if you did not get a Wadi and we're actually starting from here, then I'll say 13.3k, 13k, and possibly the 12.5k. So today I didn't buy any stock, and I did open up a position on TQQQ as I've mentioned yesterday, because I feel that stock picking in this kind of environment is very difficult. As you have seen for the past few days, you know, for Netflix, Tesla, and even today when Snap released their earnings, it fluctuated up and down 10-20%, and on top of the earnings, the stocks is also affected by the macro environment. So sometimes in environment like this, I feel like it might be easier to buy in the macro environment instead of an individual stocks. So I pretty much wait until the end of the day to buy in. And my next add-in will possibly be the double bottom at $40 if it reaches there. And if it does go down further after that, I will really have to look at data and see if I will buy in more, or I'll buy, let's say, SQQQ as a protection hedge. As for the rest of my stocks, they all dropped quite a lot today. So Home Depot and TMF is the less evil one. So TMF, you know, I got it at 15, so I'm pretty close to it. And then Home Depot, I got it back in here when I placed the 346 order. And you know, Annie, I got it at 2.1. DKNG, I got it at 16.5. This I got as 4.8. And this I was in at 27. So unlike other channels, I also saw my loss. So I don't just post all my wins all the time. And all these jobs pretty much erase all my gain previously. You know, when I did the Black Rifle Company trade, the CTXR, the LGVN, and the NE trade. But I was expecting the FOMC job, so this just came a little bit earlier than expected, and I did not have a chance to make another profit one for the little Wadi that I was expecting. So for the 10-year bond yield, because of the Fed rate hike, it causes some sell-off again, so it pushes the bond yield higher. So as I've explained before, after the divergence, we'll either have to come back down to a certain correction level. So I was aiming for 2.5, 2.6%. Or we will have some sort of consolidation. And the consolidation possibility will be based on the rate hike. And if they decide to raise the hike more than expectation, then we'll see the breakout of the bond yield, which will further make the market drops. As I've explained earlier, a lot of things are pricing right now, and I do think we're really at the peak of both the inflation and the bond yield percent. And even when they start to raise the rate hike, I am still expecting a strong market rally after June or July. And part of the reason is, if you look at the past history with the last two times when they did the aggressive rate hike, and if you put the S&P 500 on top, so even during the rate hikes, we do see a market rally, and it wasn't until the rate hike tops and stable for a period of time before the market reaches the top and start to drop back down. And when the market drops, they will lower the interest rate, and that continues the market cycle. So the market right now have been pricing in the rate hike. So when the rate hike news actually came out and announced, and I believe we will see some kind of a recovery. And if the inflation percent starting to come down in the next 2 months, and if the Fed started to sound dovish, and that market rally will be tremendous and very possibly passing the previous all-time high. And in a technical standpoint, I talk about divergence a lot, and right now we are still seeing the divergence between the RSI and the price. And same thing with the dollar. I was saying if there's a rate hike news, it will benefit the dollar and possibly retest the 101 zone. And today we see the dollar rise again. And as for Alibaba, we're finally stepping into the gap that I was mentioning yesterday. So if we close near the gap at 81, I'll open up a position. And my next add-in will probably be the previous bottom. So anything under 75, I might add in a little bit more. And again, if it falls below the previous low, I'll have to look at the macro environment and decide what to do by then. And in the meantime, always have cash available to buy in. And let's say you're buying something today and the next day it turns a little profit, even as little as 3 to 4%, do consider selling and hold some cash again, as we are in a very volatile environment at the moment. So this is it for this video. If you like the data and my reasoning, do subscribe to my channel and give me a thumbs up, and I'll see you guys next time.